Hello, and welcome to our conversation today. Today, we're going to take some time to talk through when something happens to the financial spouse. I'm so excited for this conversation. I'm Zach Ashburn. I'm the Chief Planning Officer at Reach Strategic Wealth. And this is the kind of thing that I think really matters. We can and we do spend hours and hours talking about fancy tips and tricks to improve your portfolio or save some dollars in taxes. But today we can spend some time carved out especially for the kind of thing that really keeps us up at night. So if you're the financial spouse in your relationship and you're here to safeguard your family if something were to happen to you, then welcome. Or if you happen to think of your partner as the financial spouse and you're looking to build your own confidence in your family's financial situation, then welcome. We're going to talk through 5 things that you can do to take immediate action to feel more prepared for the unknown and to gain the confidence that comes from having a sound plan. We'll dive right in. The first step that you can take is to create a live balance sheet. Creating a balance sheet in general is one of the first steps of any financial planning process. And it's also the best first step for a financial spouse to begin protecting their partner. If you don't have a balance sheet already in front of you, you could make one probably by just pausing this video really quickly and listing all your assets on one side and all your liabilities on the other. And when you do that math, you can arrive at your net worth today. And that's a great exercise. That's a great financial planning exercise. My encouragement today specifically is to have a live balance sheet so that financial spouses can share with their husband or wife access to this ongoing look at your finances. And you can do this through a number of softwares, like you can see ours pictured here, or you can do this manually if you'd like to by just updating these numbers at regular intervals, say monthly, and sharing them with your spouse. But this exercise gives us a few tools in the event something were to happen to the financial spouse. It would have all accurate, up-to-date, fair market values for all your assets. Specifically, we can see that listed here in this example. It would have the accurate info for all your liabilities. And if we were to kind of expand the view here that we have from our software, we'd see details around which accounts there are, what are the credit cards, what are their interest rates, and just the details that surround those specific liabilities and assets. But possibly most importantly is anytime you create a balance sheet, you should have it dated from the time that you arrived at these values. And that's the point where we find this to be really important for our conversation today. Almost undoubtedly, in my experience as the financial spouse, you'll have times where you find yourself having a general sense of your financial situation, and you'll be able to tell your partner that things are fine and we have plenty. We can do that remodel, or we can go on that trip, or we can do whatever it is, and you can kind of lend them your confidence, and that works up to a point. But if something were to happen to you as the financial spouse, that general sense of being okay also may pass with you, and your ability to communicate that general sense of being okay certainly does. And so having a live balance sheet serves as a jumping off point for any money decisions that have to be made in your absence, and especially confident money decisions, making them well and making them confidently. Practically speaking, it also serves the purpose of not searching for your stuff in your absence when they have to be making moves to keep your family going if something were to happen to you. And I can give you a brief personal example. We recently moved, and we were moving some accounts around, and I had opened a new account that had some of our assets moved to it, and I told my wife about this too. It wasn't in secret, but it wasn't until we had a later conversation that it was very clear. Oh, we had this conversation. She had forgotten, and so if something were to have happened to me in the interim, and we didn't have a live balance sheet she could refer to, that money would be not lost forever, but not at her fingertips, able to be used if it was needed. Such a small example of why having a live look at your current and accurate current situation is. Second of all, let's talk through your team. And this is a challenging one. If you've labeled yourself or identified yourself with the title of the financial spouse, then I expect this portion is going to make a lot of sense to you. But there are a few things that might not be quite as intuitive. So we'll break it down. In our business working with clients, there's a few common sort of like analogies that get thrown around as advisors, quote unquote, try to convince people to hire them. And some of those are like you're the family doctor, you're the GP, or you're the personal or family CFO. Another one's general contractor, and I kind of like general contractor the best, probably for one reason, is that you can legitimately serve as your own general contractor for a home project, and you also might just choose not to for many good reasons. In our firm, we call that person the personal chief wealth officer. That's the person who coordinates things, and we made that up. That's a term that we just made up, but we like it because it seems to fit well. And we kind of begin to construct an org chart from there, that really rounds out the team that's involved with maintaining a financial plan. And so for you, if you're the financial spouse, you would be taking that role of the personal chief wealth officer, or fit in whatever analogy you'd like, the person who's managing this team. Um, when we put together a financial plan, there's a few key roles that probably come into play, and you probably have most or all of these covered personally as well. So you have an accounting and tax team. You have your estate or your legal team, depending on your situation. You have your investment advisory team, your insurance team, and your financial coaching team, monitoring your financial health over time. And if you're missing any of these, there's a chance that there's a gap that you need to fill in your planning. But what's more likely, if you're here as the financial spouse, is that you're serving as some or possibly all of these. And so the truth is that if you're DIY investing, if you're doing your own insurance, if you're handling your own estate planning, maybe with some online solution, and you're doing your own taxes, we can always discuss the pros and cons of DIYing any of these things. But what matters right now for our conversation today is that anywhere you would look at this kind of org chart, and you'd have your name in as the financial spouse serving that role, you have two options. You can assess if your spouse is up to taking on that same task that you're doing in that role, and make sure that they have all the requisite background and info needed to keep things moving. That's one option. Or you really must backstop that org chart with professionals in some way. And that could be by hiring out now, or it could be having things set up if something were to happen to you. And as you can imagine, we get this kind of feedback all the time of the things that people are comfortable doing or are not comfortable doing themselves. So some people will manage their own investments, but they're not comfortable doing their own taxes. Or some people are comfortable doing their own taxes, but reach a certain point where there's a really nuanced investment question that they have, that feels out of their depth. But the point of our conversation is not if you can handle this now. It's what if something happens to you as the financial spouse. And in that case, we want to see your team having some people on the bench backing you up. So I have a few examples of how that might look, as you look at that org chart, how you could begin to fill in any positions, at least with a backup, if something were to happen to you. And you might feel awkward to have kind of professionals on the bench. And you might have personal feelings about how valuable, meaning like you feel very good to do your own taxes and don't like the idea of hiring. But again, you should put yourself in your spouse's shoes. That's what we're trying to do if you really want to safeguard. Here's some examples. So if you are serving as that person who's coordinating all of your efforts, you could hire a flat fee CFP professional for a one-time plan. So maybe you think I can handle our planning as long as I'm here, but I would like someone to be up to speed so that if something happens to me, they can step in and help my spouse coordinate things. That makes a lot of sense. And there's great ways to find those professionals who are willing to work that way. If you don't have an accountant and you're currently doing your own taxes, a good step could be to schedule a mid-year tax review and pay for that one time in June or July, and say, now my spouse has someone who's got some recent info on our tax situation that they could go to and have their taxes filed if they needed to, if something happened to me. If you are currently managing your own investments, you could hire a flat fee CFP professional for a one-time review and just get someone to get a second set of eyes on your portfolio, maybe make some recommendations, but again, have up-to-date info so that if something happens to you, there's a resource for your spouse to go to. I'm of the opinion that when it comes to your estate planning, you should probably just have hired an attorney. There are some good online solutions that can serve some purposes, but it's tough to vet those on your own, and it's tough to vet the job you did. Those tools are only as good as the info that you give them, and it really requires that second set of eyes to know that. And again, your spouse will have that resource to go to. And depending on the type of insurance that applies to your situation, you could hire a CFP professional, certainly be capable of dealing with some of those things, or for example, a P&C agent if it's for property casualty needs, or someone who's able to talk about business insurance, whatever applies to you. But getting those things, those rates shopped, or a one-time plan will have up-to-date info that your spouse can use those professionals. So that's a way you could assemble a team that's sort of on the bench if you feel comfortable doing most of it yourself. And if you, those are just some examples. There's probably other ways you could recruit those people to be on standby, so to speak, or at least have the names to provide to your spouse. Hey, I trust this person. If something ever were to happen to me, call fill in the blank. The next step we want to do is to make sure we've done the legwork around actually getting organized. We talked about the general sense of feeling like things are okay and how that may pass with you if you're no longer around as the financial spouse. And you've got a team stage for whatever your particular needs are that you don't feel like your spouse would be able to step in, especially in a time of crisis. Um, and so we've got that assembled, whether it's on the bench or you've outsourced some things. But that's really only as helpful as the info that they have access to and can interpret. And I generally think, a little disclaimer, that financial planning and in all its forms should be a freeing and empowering exercise. I don't really like using fear tactics in any aspect, but I feel like I only have one way to describe the point of what we're doing here. It's like a fire drill. If something happens to you and your spouse is the non-financial spouse, they're generally starting at a disadvantage because they haven't been as involved. Then they really need to be able to navigate your stuff, your plans, and your assets, kind of in the dark, smoke-filled room, the fire drill analogy, because that's what it is. If something happens to you and it's a time of crisis, we really need things to flow pretty well. That scramble when a loved one dies or becomes incapacitated is so real. Medical bills coming in and probate stuff to deal with, and banks being general nuisances to have to interact with. Literally planning something like a funeral. There is time to manage things. It's not that there's no time. It's that if you neglect getting organized in a way that works not for you, but for your non-financial spouse, then you're choosing to increase their stress level when you just don't have to. And presumably we love our non-financial spouses, so let's just not do that. And we can use this step as an exercise too. An exercise to find, maybe like kind of press till it hurts and find gaps and holes that we can go through. So you can refer to your planning packet to actually use your copy of what I call our personal document locator, but it's an exercise that we can use to get organized. So the cover page here that you see pictured is designed to just give you a top level info. Your spouse probably knows most of this, but in the event that something were to happen to both of you, you've got the top level info right up front, and you can add any notes and instructions along the way. I would highly encourage you in this document to list your professional contacts that you've assembled with your team, whether it's who you've outsourced to, or who is on the bench if something were to happen to you. Because if your spouse or your kids need to find your stuff and they can reach out to qualified professionals to help navigate that, that will likely save quite a bit of headache along the way. So I would encourage you to take the time to list those out. And again, use this as an exercise. If anyone is missing here, take some time to just reflect on, should they be filled in, or are you articulating to your family that you're managing these things yourself, or whatever the case may be for you. Diving in deeper, I would encourage you to note the location of your live balance sheet, add any notes that are appropriate, or alternatively, or if there's a good reason to articulate it further, you could list your account types and account numbers around. Naturally, I always can feel when I talk through this, people saying, I'm going to write out my account number and have it around. You've got to make a choice. We can't have complete security in every respect when it comes to data security. So you've got to make a choice of how you handle that in whatever way works for you, that you feel comfortable with. If handwriting it and having it in a safe instead of online feels better to you, these are all your decisions. But the point that you can certainly imagine is that if something happens to you and someone has to sift through your whole financial situation kind of cold, then they need to have all the right info to do that. Even practically, just to navigate something like a probate process, or pay your bills as a power of attorney, there's info that they have to have. So you can make your own determinations on how you feel is the best way to communicate that. But there has to be some resources that are available to them. When it comes to all of your other stuff, important documents and physical records, I recommend a location key here at the top, locations 1 through 5, and then to note it on these kind of important documents that we have listed. And in success, we go through legal, financial, personal records, and then physical items. You can take my word for it that you really, really don't want your kids to have the bank drill a safety deposit box that they find out about a year later. And you don't ever have the keys to. Don't test me on that. Just take my word for it. It's not a pleasant experience, and you don't want to have to go through it. So things like that. You could swap in, call a state attorney for this or whatever. What I like to see happen is that this document is able to exist in a place where you're able to communicate to your spouse or to your kids, hey, you need to find this document and it will take you everything else. You don't necessarily have to know where all my accounts are today. You don't need to know who to call today. You need to know where this thing is and it'll guide you from there. It's kind of the point. Moving on, two more points to tackle. Number 4, creating an investment policy statement. If you're not familiar with that term, one of the biggest areas of risk if something happens to you as the financial spouse is that you're not there and present to carry out your investment philosophy. And as a professional, I look at your portfolio statement. I should be able to assess what convictions you have about how you invest your money. That should sort of be apparent from what is on the page. It's not uncommon though for me to review statements and it's clearly that there's not much strongly held belief or strategy, or maybe you've hired an advisor and they're doing something, but you don't know, or it's not apparent how purposeful or aligned it is with your personal convictions. So now imagine all of that, but place yourself in the shoes of your partner digesting all that info if something happens to you. Maybe they don't even care about investing in general or trust you to handle that. So some of the things that you'd notice or that I might notice don't jump off the page to them. That's what an investment policy statement is meant to cure. It should be designed to help with managing and understanding first of all, the rules and accountability for portfolio management that are aligned with your beliefs. Second, it should contain your investment philosophy points. For example, that investment should be low cost, or they should be index funds, or it should be, I believe in dividend paying stocks, or we believe in socially conscious investing. Whatever your philosophical points should be contained in this document. Excuse me. It should also contain your technical portfolio management points. For example, asset allocations, how you want to rebalance, restrictions around the things you want to own, or how they should be handled. So maybe we don't believe in utilizing derivatives or something like that. Should be contained in there. Whatever your convictions are. And most importantly, all of those things should be stated in a way that's simple and clear. That it's really something that you could pass off to almost anyone, and they could sift through and understand what you meant to say. It would be very easy to construct a nonsense technical investment policy statement that says a lot of fun, fancy words and sounds really smart and Wall Streety. But if it doesn't actually communicate, then what are we doing? Here in our firm, we'll use that as accountability for how we manage someone else's assets. But it's just as helpful, if constructed correctly, to communicate to your spouse if something were to happen to you. Hey, these are the things that I've always thought were really important about how we invest money. So there's a few points that I would suggest you work through. And in your planning packet, there's an outlined version, an example that's rather short. It's only a couple pages. You can, if you just Google this, you can find other templates. Also, you can find templates that are dozens of pages that probably don't suit the needs of your family. And you can work with an advisor to construct one if you find a good planner. But starting, you should have some sort of overview about your general goals for investing. And this is where you might say, we believe that investing is for the long term rather than the short term, or something like that. What are your general goals for investing to fund your future retirement goals? Next, you'd probably want to list something about your specific objectives, the main facets and characteristics of your portfolio in service of the goals that you've outlined in your overview. So we believe in low cost diversified investments in pursuit of our long-term retirement funding goals, something like that. That you could probably simplify as you want it to be present for your financial spouse. Your non-financial spouse. You'd want to include your philosophy on risk tolerance, how you handle market swings, and what are your personal risks and your views around managing them. So you might be including information on what you believe you should do in the case of market downturns, or what you believe your family's risk tolerance really is. That you want to balance out the risks of the stock market in certain ways by having cash or bonds or whatever it might be. These are not suggestions on what you should do for your personal portfolio. These are examples of what you might include in your own IPS. And then lastly, probably most technically, you'd have some illustration of your asset allocation and how you rebalance your accounts. That's how you manage your investments ongoing. And I'll remind you again that if you use professionals, you might get like a 10-page IPS or some ridiculous or useless risk questionnaire to construct this. And part of that is compliance, that we have to answer for stuff that we do. But then there's some of that is really useful in these outlines. But I'm going to pause for a second. That I can almost guarantee someone will watch this and think, I'm not sure I can actually construct this in an understandable way. And they're definitely going to think, if I do write this, I'm not sure that my non-financial spouse is ready to read or execute it. And that's okay. But it tells us exactly where we need to work. And it's on everyone's understanding and potentially backstopping your efforts. So if you're not able to articulate these things for yourself, you may want to seek some help in doing so. And if you are and you feel comfortable with that, but you feel shaky on if your non-financial spouse would want to step in, we'll assume that they're able to, but they might not want to. Then you need to backstop their efforts either through sharing more info or through having professionals on deck or whatever it might be. What you don't want to see happen is for you to have constructed your great, let's say, passive Vanguard portfolio that you really like, and it's totally fine. And then you keel over and someone from some insurance company comes along and sells some expensive product to your husband who never cared about the money and is just doing his best in a time of crisis. That's the last thing you want to see. And the time to have that laid out is now. And so if that's articulated well, then your spouse can operate on it, or they can take that to a professional to say, this is where I want to see our investments. This is what I want to see reflected in our portfolio. So hopefully that makes sense and tracks the reason that constructing an IPS is a crucial part of backstopping, safeguarding your family if something were to happen to you as the financial spouse. And lastly, major moves. The final thing that a financial spouse can do to safeguard their family if something happens is to map out your major moves. So this specifically is a graphic that we use to describe the life cycle of our tech consultant type clients in regard to their income and some of the moves that they might make. But I think it can serve as a good example. As you look forward from where we are today with the goal of protecting your family in the event of the unknown, then put a map in place to guide them through the major moves you're anticipating to make if you are around. And then you can adapt this idea to your own needs by considering your role as the financial spouse, if based on how the income in your family is broken down, meaning if something happens to the main earner in the family, then that might have different implications. So for your working life, how are you making tax planning moves over here on the left? What are the tax planning strategies that you're using to maximize your financial plan right now in your working life? As you exit the corporate world, maybe you go independent or you start a business or whatever it is. What are your plans for how you're going to navigate health insurance? If you're the one handling that for your family and something happens to you, they should really be able to walk through that plan. If you're starting a business, what are your thoughts on tax planning through that time period? As you reach your peak earnings years, how do you plan to manage your portfolio, and how are you planning to give money away? These are important questions. As you reach your early retirement, if you're trying to exit the workforce early, or your spouse already will have by this point, how will they know if they're secure? And what will they do as that happens while their parents are aging along the way? These are important questions that you may have, again, a general sense of what we think we should do. Let's get it out there. Let's put a map in place. And naturally, as we reach retirement years, how are you planning to use the money that you've saved and worked for? And how are you planning to handle long-term care needs, whether it's both of you or one of you at the time? How are you planning to pass money along to your kids? These are all pivotal questions. They all represent planning windows that are only open for so long. And if we miss one and it closes, that is okay, but it will represent missed opportunities. So having this map in place can be extremely important and a major asset to your family if something were to happen to you as the financial spouse. Um, it turns out that as we map out your major moves and we add it to the work that you've already done, you end up with something that we would just call a version of a financial plan. So if you've considered where you are now, including your balance sheet, and you've assembled your family's team with whatever roles needed to fill in that org chart, you've gotten organized and you've developed your investment policy statement for how your assets are going to work towards your goals, and you've mapped out your goals and your major moves, the end result of that process is that you should be really able to stress test your framework and find out as the financial spouse where your family is at risk along the way financially and where they're at risk of needing help to execute that plan if something were to happen to you. So those are 5 ways that we would believe that the financial spouse can work to backstop and safeguard their family if something were to happen to them. I hope those are helpful resources. You can refer to your planning packet for more info and the resources that we reference along the way in this short conversation. And you can reach out to us anytime. We're here to help. Shoot us an email. Reach out if you have questions about how best to safeguard your family. Thanks so much.